Welcome back to the channel, everyone. So what the heck happened today with Google stock? I woke up this morning and I find that it's lost 95% of its value. What the heck is going on with that? Just kidding. I know Google stock split today, and that's what I'm going to talk about in this video. As of today, it was official. So if you woke up this morning when the market opened and you saw Google trading for 22.50 a share as of close of business Friday, now you see Google closed today $109.91. So that's a difference of 95% from where it was before. But that's because one share is now worth 1/20th of what it was before, but you have 20 times the shares if you were in this stock as of close of business Friday. So that's how splits work. But I just had to kind of make that joke because I've actually seen other YouTubers that didn't understand that. So Google lost 95% of its value. Oh no, because of the stock split. But anyway, so I actually want to take this video to analyze Google a bit further. I actually want to buy into it when I get a little money saved up at this point to buy more stocks. I want to buy into this. Funny thing is, if you look at Yahoo Finance down here, the 1-year target estimate is still $3,047. So that hasn't adjusted yet post split. That would be phenomenal. And I bet there's probably people that will look at this and say, holy crap, $110 stock could be 3,000 by the end of the year. Let me buy that now. And folks, I'll tell you firsthand, don't make a decision just based on what you see on Yahoo Finance. All right. Anybody that sees this video, if you see something like that, that does not mean that Google stock is going to trade for $3,000 by the end of the year, or that it's projected to do that. This just hasn't updated yet. That's all this is. It's like imperfect information. But anyway, hopefully no one does that, but I'm sure there's probably some people that will. But anyway, now we can look at Google on the post-split adjusted basis. So at the post-split adjusted price, it was trading at up to almost $150 as of February 2nd. The 52-week high and the post-adjusted split price is $152.10. And actually, in the after hours trading, it just popped up. So it's up 5 cents or 0.05% for the after hours trading so far. I am actually very bullish on Google long term. And I think now, like with most stock splits, I think that the momentum from the split, the momentum of new investors coming into the stock is going to cause the stock to go up significantly. Just that alone will definitely drive it up in terms of trading volume on the buy side to push the stock up. But from a fundamental standpoint, I also really like a lot of what Google does. And I've always wanted to own the stock, and now I have a chance to get into it. And also, they're the parent company of YouTube. So a little plug for the parent company. It'd be cool if they paid us ad revenue in Google shares of stock instead of cash, because, cash is worthless now. I'd just rather have the Google stock, not spend it, live off other sources of income, and just get the ad revenue in Google stock. So there's an idea, Google. That would be really cool. But let's look at the financials real quick. The PE ratio is actually below 20. So relative to what it's been in the past, that's actually not too bad. Still maybe a little high from a value investing standpoint, but not too bad. If we look at the revenue of this company over the last 4 years, and if we take the trailing 12 months, which is what TTM stands for, in case you didn't know, $270,334,000 even, and these numbers are in thousands. So keep that in mind in terms of comparisons and units of measurement. So for the fiscal year ended December 31st, 2021, total revenue had increased significantly above where it was the year before. And even on a post-COVID adjusted basis, even factoring in the pandemic, revenue was still higher in 2020 than it was in 2019. Cost of revenue went up significantly in 2021 over 2020. And that's also reflected in the trailing 12-month rolling number here. But gross profits also exploded over that time. And part of that is YouTube ad revenue. So let's actually drill down here. So we've got operating revenue under total revenue, which is basically the same. So that's kind of a meaningless arrow there. Operating expense, selling, general, administrative. Let's drill down Selling and marketing, other G&A, selling. Okay, so that's the drill downs for that. Net non-operating interest. We'll avoid that. Other income expense, pre-tax income, net income, common stockholders, basic EPS. Basic EPS doubled from 2020 to 2021, and that's earnings per share, of course. Diluted, slightly lower. And this is one of the reasons why, you know, I'm a big fan of the stock, not just on momentum, because I wouldn't trade just on momentum for, you know, from new buyers coming in, being bullish on the stock and being able to afford the stock now. But also you see what the company's actually earning per share. Total operating income as reported went up again significantly in 2021, phenomenally. So Google is actually doing really well. And I saw some meme or something somewhere, and I wouldn't base videos off of memes, but it's showing how the share of Google revenue that is YouTube ad revenue is like growing. So all of us are definitely part of a growing business, so to speak. Let's see, net income from continuing and discontinued operation, normalized income, interest expense, and then EBIT and EBITDA. We won't go through all of that. Let's just look at cash flows real quick. And then we'll end the video on my favorite example that I do in every split video, which I've kind of already done. So I'll kind of try to make it more original. But let's see here. So cash flow, free cash flow, which is one of the most important metrics of the financial lifeblood of an organization. The free cash flow has increased year over year, and we see the same thing we've seen in a lot of these other line items. It increased significantly from 2021 to 2020. And I see that trend continuing, maybe at a slower pace, but I think it will continue nonetheless. Capital expenditures have ticked up a bit, issuance of debt, repayment of debt, repurchase of capital stock. Not sure if these are buybacks, but this has gone up consistently. Let me just, we'll do a Google search, help the parent company again. Let me see here. I want to see, just to be fully accurate here, repurchase of capital stock. Okay, bear with me here. A stock buyback, yeah, we know that. I'm assuming it's the same thing. I just wanted to be sure. But I'm assuming it's the same thing. So that looks like that's going up. That also helps the stock go up in a kind of non-fundamental way. What else do I want to go through here? The more boring stuff. Balance sheet, total assets, total liabilities. We're seeing the same patterns in all of these. But let me see here. What I really want to show, if I can pull up a quick spreadsheet, I still have my GameStop open. I'll just do this real quick here, like I do in every stock video. And I'm guessing that the A shares and C shares are kind of irrelevant at this point. Back in 2014, when they split the last time, one was supposed to have voting rights and one wasn't. So if we're at just say 110 today, and we were at basically on a pre-split adjusted basis, this stock was at $3,000 in the beginning of the year, or close to it when it hit like its all-time high. So for the stock to just get back to where it was, which happens a lot with popular tech company stock splits, we've seen with Apple, Tesla, NVIDIA, several of them. Another reason why I find splits very attractive. So if the stock got back to $3,000, if you just put 10,000 in, my favorite example I do in every video, if you would just put 10,000 in today, you'd have just say 90, make it an even 91 shares. And then just say these 91 shares then became worth $3,000. Then you could have $273,000 off of that initial $10,000 investment over time. How long it takes to get back to its pre-split adjusted price remains to be seen, obviously. None of us have a crystal ball, so we don't know. But like with Apple, it was doing it like every 5 to 7 years at one point. So that's very exciting. And I'll even make this bigger here. because that's a nice number there on one investment, $273,000. So with that being said, hopefully that was a bit motivational for anyone's potential investing in the future. If you would like that, please remember to like, comment, and subscribe, and keep an eye out for my next video coming out about the blockchain. Thanks so much for watching. Take care.